name Narayanan Swaminathan. I run a company called SHS Advisory Group. My company started in the year 2004. We have been advising more than 13,000. We've got more than 13,800 clients. We have completed more than 1,000 plus transactions related to business and financial advisory. And we have done business development advisory. We have arranged funding for many people. We also handle the critical financial issues. We advised more people to invest in a company as a startup or a new investment or existing company or equity investments in mutual fund or stock market, whatever, real estate also. So what I am trying to talk about today is every person must every business owner must follow the certain things to achieve the mission and vision of the every company owner. So we've got more than 13,500 client reach. I've got more than 2,000 YouTube subscriber. We have got more than 300,000 YouTube views. See, this is our company profile. So I am every week, every video, I talk about some important topics in business and financial need. So I've been covering about business services, business analysis, financial analysis, business model, financial model, valuation, information memorandum, pitch book, one-page teaser like that. Today I'm going to talk about capital rising. So capital, what is capital rising? The one is portion called capital, the another equity, and the other one is called debt. Debt means loan. You must repay the money. What is capital? Capital means equity. You don't need to repay the money, but you are responsible for the money for the entire profit and loss. So what you should do, the capital rising comes when you are starting a new business, you require a capital rising. When you are running an existing company, you require a capital rising. So this equity called sometime capital rising, sometime equity dilution, sometime you call as a strategic investor. I would like to give you the difference between the various parameters. When you talk about capital rising, that means you are looking for money for your company. It can be venture capital, private equity, HNI investment, IPO, public issue, SME, listing, international equity, whatever it is. If you are talking about strategic investor, that means you are having a good company and you are able to run that, but you are not able to run it, but you require an investor with a contribution. That means you require somebody to manage your business additionally or fully, along with the money, along with the technology. So both coming with the money and expertise. One is without expertise, one is with expertise. So what you should do to get the capital, or you should get the equity investor or strategic investor. So as I told you, the information memorandum and pitch books are very, very key to get that. We need a one-page teaser note to send to the investor. To approach any investor, the basic pattern is, first, suppose you are running one particular technology related business, whether it is startup or whatever it is. When we are approaching towards capital rising or strategic investor, first we need to find out what is the technology you are into. We need to find out who are all the investors invested in the sector. Based on the information memorandum, based on the comparative and comparable analysis, we have to do a research to identify the people who are on this space and who are all in this particular territory, who are all invested in this much size, what you are asking. So we have to do this kind of a filtration. We cannot send every day every proposal to every investor because they may block you. So we need to select, we need to identify first. First, research and data mining is very, very important. That means it is going to be who is going to be our target. After target identified, then we must do lots of groundwork to get their personal email ID or personal phone number. That's got a lots of research we have to do. There are various platforms we have to go and search to get their name. After getting their name, based on the criteria only, we must do at least to do a 10 investor or 10 strategic investor, 10 buyer meeting. We must do minimum 100 target people to send the first information. To do 100 data collection, definitely it will take 15-20 days time, and we must, that means we have to send it to everyone. We have to send the teaser, then we must slowly follow with them without irritating them. Then after that, we must arrange the investor or buyer or strategic investor along with you. So suppose you are looking for funding for your company or a strategic investor for your company. This pattern, what happened? To talk to 10 investor or 10 potential buyer or strategic investor, no investor or buyer is going to talk to you unless he is showing a real interest in your sector or your company or your product. So to do this 10 investor, it's going to be huge time. This has got a cost involved. Do not think that it is going to be a just free of cost. You can take the fees after success and all. These are all, whether you do it, whether we do it, or whether anyone does it, it is going to be a professional, lots of time involved in this. So do not underestimate that because we are into investment banking, we can just call 10 people and ask them to put the money. It won't happen like that. So every time you need to do a fresh approach, fresh data mining, fresh research, and fresh call and fresh arranging investor with you. This is a cost involved. Whoever is going to be there, definitely they will be asking you retainer, and definitely they will be asking you success fees because they need to follow. Success fee is paid. It is being paid based on the further action, further negotiation, further follow-up and completion of the transaction. The retainer fee being paid based on the work what they are doing. I hope you understand everything about this. Thank you very much. Looking forward for further video calls, and please subscribe our YouTube channel to get more inputs. Thank you very much.